SPY is still holding above the heavy dark pool accumulation that we had been seeing in previous weeks, as this box is showing right here, roughly between 374 to 389. There's been billions upon billions of signature dark pool prints, and we've stayed above it. And not only that, we also, 2 weeks ago, we bounced a little bit above this box area that I have here, and also right off of this trend line that I have as well. I've referenced this a lot. This goes down to the COVID low and then drags across to the June low that was our previous yearly low of 2022, as you can see here from both of these critical pivots. And we bounced off of this, off the retest that is, because this previously was a hard resistance. As you can see here, around this area we got rejected back in October, and around this area again we got rejected in late October, until we finally broke above it in early November, retested it 2 weeks ago over here on November 17th, and then since then we have bounced continuously off of it, and now it seems we are en route to this yellow line over here, which a lot of people have a lot of eyes on, and that typically means that it's not going to be that easy to short straight off of this level, because previously, if you had shorted based off this level, at least back in late March or back in mid-August, you would have had around an 800 to 1,000 point short setup off of these, because both times it fell. This time over here was about 1,000 points, and this one was around 800 and 900 points off this level. So again, a lot of eyes are on this line right here, which typically means it either will sell off beforehand, just a little bit beforehand that is, or we touch it and then it has some form of a minor pullback and actually breaks through, and it'd be kind of like a curl setup, which we've seen in the past with other tickers. But I'm actually really interested to see what will happen if we do touch it, because undoubtedly there will probably be some form of initial rejection. But if we have that scenario where we do a small pullback and then it shoots up above and we have kind of like a fake breakout, but first it goes back above, you'll see a lot of shorts get slaughtered in a sense there, because they're not expecting this thing to break out of this trend right here. And it seems like there's still a lot of bears in the market as we continue to grind higher and higher each day. And also something very interesting, if you look back to the flow 1121 to 1125 from last week, yes, we had a shorter week last week. However, if you filter the flow for over 1 million in premium, you can see 39% calls to 61% puts. If you've been watching this channel for a while, you've been subscribed, which by all means do so, it is free to do that. If you've been subscribed for a while, you know back in August, you know back in September, even in early October, the put flow was overwhelmingly bearish. Like a low week would be considered 85% puts to a 15% calls. We'd seen upwards of 96% put to 4% call. Looking at previous weeks, I think it was back in like August or maybe even early September, we saw something like that. So 39% to 61%, and the fact that the last few weeks have been a little bit better in terms of the call side to put flow, that is still interesting, because previously, again, like I said, in August, when we saw a top back here, we were seeing 90% plus in terms of put flow to 10% plus, or minus, I guess, in terms of call flow. So, and then we sold off quite a bit after that. And right now, everyone's thinking that we're going to have a very similar outcome to what we did back here. And yet, look at this, it's 39% to 61%. This is only one metric. Obviously, never base your thesis off one metric, but I find it interesting that we haven't seen the sheer amount of put flow as we did back when we were previously starting to sell off for this about 800 and 900 point sell-off that we had between August and early October. Another thing I want to note is the Dow Jones. I've been watching this one very carefully for the past month now, because it showed a lot of relative strength to the rest of the market. As you can see here on the 15-minute chart, we had a clean breakout last week of this pennant formation. It started with a big gap up to get above this resistance, which the market tends to do, especially indexes tend to have a large gap up above a critical resistance, and then continuation after. And then that's exactly what happened. We continued afterwards to close with a very strong end of the week candle. If you go to the daily, you can see there's been two critical breakouts. One that I've been watching and referencing in our videos, which is the one of this downward trend line, also very similar to what I showed you on SPY. As you can see here, this is the downward trend line that we're watching on SPY. As you can see with Dow Jones, we did a retest. Look at this, we had a retest, we had a curl back here after we had the initial rejection, but then it bounced up, gapped up above, and has had continuation upwards. This is a common occurrence when you have a large downward trend line. And something that I want to show you as well is on Apple's chart, and we actually traded this all the way back, crazy to believe this was all the way back in early July. This was a curl setup for a downward trend line that I personally added calls on. And as you can see here, we have the top resistance, this yellow line, and bottom support. This was the downward trend structure that we had been trading within for quite a while. We had a very nice retest of this level again over here, this downward trend line level, where we had an initial rejection and then it curled and broke out to the upside. And this one squeezed for quite a while, all the way until middle of August, which then we sold off, and that prompted the market-wide sell-off as well. But we stayed above those previous levels over here, despite the market going below the previous yearly low back in June. Why I bring this to your attention is now we've seen two critical downward trend lines, such as Apple from back here and also the Dow Jones, get touched while we're going to the upside, kind of like we saw during this rally. We had a slight curl before it had the initial rejection curl, and then it popped above and continued upward for a clean breakout. What's interesting is now SPY is reaching its time to hit this downward trend line, and we've already seen two rejections previously off this line. So again, all eyes are on this line for right now, which means there's a potential. Obviously, we still could sell off slightly before or sell off the level. However, typically it's not that easy in the market. So because of that, I'm very interested to see what happens, especially within the next 2 weeks as we are nearing this level, because like I said, a lot of people seem to still be bearish, which is rightfully so. Nothing in the macro environment seems to condone the market continuously going up. However, you have to remember the market is pricing in a lot of things and also works in the future because the market's not just about the present time. So I'm interested to see what happens around this level. And certainly an initial rejection off of this would get a lot of shorts happy, thinking that we would have a lot more downside like we did in the previous levels back here. Although with what I showed you earlier, there are other scenarios that can happen from that. So I'm just making sure you guys keep an open mind to all possible scenarios here. Additionally, I'd like to do a dark pool update. We had seen very minimal amounts of dark pool activity all of last week, but partially that's due to the fact that we had a shortened week, so not as much volume. However, we did see 1.8 billion on Friday. You have to remember this is from the day previously, which would have been Wednesday, because signature dark pool prints are delayed by 24 hours, and of course we had Thursday off. But looking throughout the week and everything, pretty light overall. As you can see here, Tuesday only 893 million, so nothing crazy, especially when the previous 3 weeks we had seen a billion plus every single day that the market was open. So this is pretty small in regards to what we had seen previously. Also, what I have here in the box, we'd seen billions upon billions every single day. A few of these days in this box were 4 billion plus, which is extremely rare in the market. So that seemed to kind of like dissipate and everything, which actually is slightly more on the bullish emphasis side, because we now are above this critical range of 374 to 389 where this box is, which means this is the meat of the dark pool premium we had been seeing. And we're above it still, and not only that, we've stayed above it for quite a bit, and actually it's been above for 3 weekly candles now, which shows a form of confirmation. It's not just like we closed 1 week above and fell back into it afterwards. It's been 3 weeks now that we've stayed above, and it looks like we may even get a monthly close above this level. So because of that, there is more bullish emphasis as long as we are able to stay above these levels, and the fact that we haven't seen any more in terms of potential offloading of shares up here around like the 395 plus range. We've only seen limited amounts. Again, we saw like a 1.8 billion. Again, we've also seen the 893 million and these low amounts of premium up here around this range. So it's nowhere near the amount we'd been seeing previously around 374 to 389, which leads me to believe there isn't as much sell pressure up here yet by big institutions, and there's potential that they were loading quite a bit down here for a larger possible move. Lastly, QQQ is breaking out of one of two trend lines that we've seen in terms of downward trend lines. Again, a lot of similarities across the market with these downward trend lines. This is the gray one over here. Goes back to around the all-time high level, similarly to the other ones I showed you on Dow Jones, as well as SPX. And this one is slightly different because there are two lines that you could attribute to this downward trend. I use this one mainly because it had previously been a rejection zone back in late March, early April, and also was a rejection zone in early August. However, we had a fake breakout, so SPX could satisfy its own downward trend line level, because I consider this to be a fake breakout since we broke back below pretty quickly afterwards, so it didn't continue upward, didn't have any form of continuation, that is. So fell below. We had another rejection back here in mid-September that rejected downward to where we had the yearly low. And now just recently we had a critical weekly close, as you can see here on the weekly chart, a critical weekly close above this level. So this week is important because that could potentially lead to continuation at least continuation as we saw back here, even though it was only muted in a sense because we didn't have that much or that many days that were going up. However, the fact that we closed above here is bullish in a sense, and especially if we're able to hold above. Now, there's still potential that it could gap down back below, kind of like we saw back here on November 15th. However, as of now, we are above, so I will treat it accordingly, and as long as we stay above throughout the week, then it is in a more bullish emphasis. And the reason I said there's two potential lines here beyond the one that I'm showing you right here is also because you can consider this to also be a line if you connect it up here. This is a rough estimate I'm doing in the video, but this would be another line, which means that there still is potential upside for it to hit this level. But again, I prefer this one over here because this was a form of a fake breakout back here back in August, where it was rejected soon after because SPX was able to hit its own downward trend line and get rejected. But other than that though, appreciate you guys watching this video today. It will be an interesting few weeks ahead, especially as we go into the end of the year with only a month left. So we'll see what happens here. Continue to watch these levels that I provide in the video, and I'll see you guys next time on Wednesday.